Right now the time is 7:35 p.m. Pacific time on Thursday, July 21st. So I just took a trade earlier on US dollar Swiss franc. It looked like it was breaking down, and I took a sell following the 4-hour and 1-hour time frames. I exited this trade already at 5:29 p.m. Pacific time. Got an 8 pip loss, which was about 0.5% of the account. So let me show you how this pair has been performing today. So it did look like it was breaking down on July 1st again. There was an engulfing bearish candle right here. And this afternoon, it was selling down entirely throughout the New York session. 4-hour chart, Kijun Sen was down, Tenkan Sen was down. 1-hour chart, same thing, it was angling down. It looked like it was breaking out of this support right here by this wick at 0.96669. So let me show you the exact entries. It looked like it was going to break out at the beginning of the Tokyo session. You can see I entered on a 5-minute candle bar close that engulfed the previous wick here. But this did not happen. It reversed entirely. I was actually timing my trade on the 2-minute chart as well, so I was watching each of these 2-minute candles form right here. And then this one closed into this wick, and I entered at the close of this one that engulfed the previous wick down. So it looked like the trade was going to go almost at 1634, but then it got resisted, bounced back. And this kind of market is very tricky to exit because it looks like every time there's a push down, it's going in your direction. But you have to recognize this is a high volatility rebound move. I'll show you why in a second on the currency strength chart. But I ended up, I set my stop loss all the way up here. It was about, I think, 30 or 32 pips all the way at the previous breakout low on the 5-minute chart. So my idea was to exit as soon as it started testing the previous high over here, and it did at 1728. But you can see each time, even though it looks like it's going higher, the sellers come in and take it down sharply, and you might be tricked into thinking it's going your direction. But you have to recognize the overall direction it's going on the higher 5-minute chart. So as you can see, even though these sell-off moves are just long wicks on the 5-minute chart, it doesn't even last that long. But you know, here you can clearly see it's a weak attempt by the bears to sell the price down, and the bulls are able to recover each time and go higher. So I was looking at this 5-minute candle close, and then the subsequent one engulfed it is when I decided to give up on selling and exit. So you can see my precise entry and exit marked here. How many pips is that? Yeah, 6 pips on this chart, but I think it was a little bit lower, so 8 pips as I calculated. Let me show you how US dollar Swiss franc moved in the last couple hours on this strength chart. So you can see clearly the volatile moves down were caused by the US dollar. Each time it had a very violent downswing before going up, another violent downswing going up. And even this big one here, right? It almost went to the second low, tested it, but the buyers were still able to bring it up. So in these markets, you have to be more aware of the higher low time frames, like 15 or 5-minute charts, because those will show you how minor all these retracements really are. So yeah, ever since then, it's still been doing that. You know, it goes down very low on the 5-minute chart, and then starts going back up. But you have to recognize by some of your indicators that if you put on Bollinger Bands, this is very clear, but it breaks past the SMA, and then keeps going the other direction, higher highs, higher lows. Same thing if you check 15-minute chart. It also just crossed the SMA where I exited. So yeah, it's looking like USD Swiss franc is going down, but still very volatile in these areas on the 4-hour and daily charts. Yeah, you can see a lot of fighting by the bulls and the bears. So, but if it does break down, it will probably keep going until the support. Or it could be sent higher. It looks like the US dollar downtrend has been lasting pretty much all of this week. Yeah, starting on July 15th, which was last Friday. So yeah, the bet is if you think US dollar is going to keep being bearish for the rest of the month, or you think it has a good chance of reversing, during the Fed meeting on Tuesday or Wednesday. Yeah, I'll mention something else that's specific to my trading journal. These last 2 trades were a little bit frustrating when I was in them, but each time, after I exit the trade, I just take the next maybe 6 or 12 hours to think about the trade, how it went, and how it would play out in the long run. But both of these were good trades. I may have used a little bit more lot sizing on number 10 trade. I think I rounded up to maybe the next whole number. So even though the pips drawdown wasn't that much, in fact, my previous 2 wins would have covered it. The account drawdown was significantly higher because of that leverage. So that's one reason why it's very, other traders will always teach you to think about risk first before the reward. So if your bet is inconsistent, your results are going to be inconsistent in your account balance too. You may be betting higher when you're losing, and betting less when you're winning. So you don't want that in an overall strategy. In fact, if you're ever not sure, you should probably bet less than whatever the set percentage account that you're willing to risk. If your estimator says 13.3, do 13 or less. So yeah, I've only having a consecutive loss in my account is not really usual. You can see consecutive losses I have here. I think I looked in the previous months. I don't really have more than 2 consecutive losses at a time. So even per my own account performance, the strategy should increase or have a win in the next couple of trades here. 3 would be very unlikely. I would like to see if that can happen.